Hello and welcome to this edition of the video market update. It was a lazy week with few economic releases and events which had only a slight impact on the market throughout last week's trading. But this is aside from the Reserve Bank of Australia and Reserve Bank of New Zealand decisions, which had also a notable impact on both the Aussie and the Kiwi earlier last week. As both banks basically are concerned from the recent strength of both currencies, saying that both currencies are still overvalued and this might also complicate the economic adjustments. However, the Aussie closed last week also on no change, but still struggling below the 0.77 resistance area, which remains also solid since March of last year, while the Kiwi is also struggling below the 0.78 resistance area, which also remains solid since May of last year. But we will take a look at their technical chart later in this video, but before that, let's talk about the upcoming week. There are many economic figures will be released during the week ahead from all over the world, but the most important figures we will be keeping an eye on is basically the inflation data we have from China, the UK, the US, and this is also in addition to the GDP figures we have from Japan from Japan on Monday. Germany and the Eurozone will be released also on Tuesday, in addition to the jobs report from the UK on Wednesday and even in Australia on Thursday. These are the main economic figures that we'll be watching over this week or over the upcoming week, which basically set to have notable impact on the markets. But yet, traders need to keep an eye again on the US, as the uncertainty over the new administration plan is still rising by the days. Moreover, this week the UK upper house has already or will have a debate over the Brexit plan after the lower house has passed already the bill last week. But this might be also very tough, as the UK Prime Minister Theresa May does not have the majority in the upper house to secure the bill yet. Everything is still possible, and if they manage to pass this bill, this would have also a notable impact on the market and also a special GDP or the GBP or the Great British Pound, in addition also to the FTSE and the European equities, as the Article 50 will be definitely triggered by March of this year. This is if the upper house passed the bill. However, the UK again is not the only country to watch in the coming days. Traders should also follow the EU response to the Brexit plan. In my opinion, for the time being, the EU has no obligation or even a reason to accept the UK plan, especially the trade plan, as Theresa May said. Therefore, the negotiations will be very tough in the next few days, in the next few weeks and months also, and this would put more pressure on the market. So this is what we will be watching in the coming days for the time being. And now let's have a look at some of the technical charts and see how they're looking for the week ahead. Beginning with a very quick look at the Kiwi and the Aussie on the weekly. As I said at the beginning of the video, both are still struggling on a very key resistance area, which is basically for the Kiwis about like 73.05, which held since July of 2016, with no clear break above that resistance so far, which needs to be traders need to be very careful in when going long, especially that so far we haven't seen any kind of a breakout. So far, that's true that we've seen at least more than 8 weeks or almost like 8 weeks of consecutive gains, which basically makes it very hard for the pair to continue on gaining for the time being. We had 2, 4, 6 weeks of consecutive gains, and now last week we had a very negative bearish candle on the weekly chart, which makes it very a little bit clearer for me, like to see some sort of a retracement to the downside, or the downside might continue. Also, don't forget that the Kiwi and the Aussie has been also trading within a sideways trend for the past also a few months. Therefore, I still believe that the weekly close might be just an opportunity for more sellers to come in the next few days with a tight stop above last week's high. That will be very possible, especially that technical indicators are also showing some sort of a weakness or started to point to the downside. As for the Aussie has the same story, almost same range, but we're stuck below the 77 and 76 30s since March of last year. We tried to break above that level many times, and also last July and also in October, but without any chance. And since then we've seen that sharp decline all the way to 71, which is also a former support, which should be watched very careful. But for the time being, on the weekly chart, on the weekly moving averages, it's slightly positive, but technical indicators are heavily overbought. So I guess, or my guess is, still sellers will be shown sellers are likely to show up again sometimes this week, but with a tight stop again. That you can we can go like with a short position, but at the same time I would like to see I would like to put my stop loss above the 77.80. That will be very safe to short, and I'll be looking for another dip all the way back to 74.70, 74.80, which is the 50 week moving average. Going into also the euro. The euro is basically developing very nicely for the past few days and for the past few weeks. So first of all, we had this uptrend and trending very slowly all the way up above the 50-day moving average, and then we went back down, testing that moving average all the way back up. We went to the 100-day moving average, which is also very good, and then we tried to break above that resistance, failure, and then it continued all the way down. But last week, this is the reaction when the pair also tested the 50-day moving average, which is very important also to keep an eye on, because so far this is just a very technical retracement to the downside, especially after we broke the downtrend. But technically looking at the last cycle, so far this is very good reaction between the 38 and also the 50-day moving average, 38.2 Fibonacci and 50-day moving average. For the time being, I guess there might be a possibility to test the 105.90s, which is like the 50% moving average from the recent rally. And I guess after that we might see another jump all the way back to 100-day moving average, or even above the 108. But so far I can't even see that the euro might even break below this year's lows, or the record low, not the record low, but this year's low, or the recent lows that we've seen in the euro, especially that technical indicators are almost oversold, which does not give it like that much room for more declines. So this is it for the euro. I'll be interested to buy with a very tight stop. Going to the dollar yen, which is still also developing, we dropped back all the way back below the 115. We also tried to break below the 112, but so far it's been struggling to break below that level, because don't forget that there is a lot of stops below that level. So that's why we've been trading for the past like 4 days below that level, and then we spiked all the way up on short covering. However, if you take a look also the very technical chart, so on Friday we tried to break above the downtrend, or the short-term downtrend, but it failed to do so, and we closed the week on a doji. We'll close the day on the doji on Friday on the doji. That's why I think there is still a possibility for another break higher, maybe toward 114 and 115, to retest the 50-day moving average again before the downside continues. Also, the jump actually came in all the way back from the almost from the 38.2% Fibonacci. So I guess this is just a very short-term retracement to the upside before the downside continue. Also, don't forget that the dollar index is not doing very well for the past few days, especially that we broke below the 100-day, the 100 barrier, and we are still struggling around that level. Of course, we closed last week at 170, but this doesn't give it that much room for more upside ahead, especially that the plan of Donald Trump is not really well for the economy for the time being. Going into the British pound, the British pound is also developing the same thing. So we broke above the 100-day moving average again, and we tried to stay above that level, and we did so. But we're still struggling above the 50-day and the 100-day moving average, which is a very important thing to watch in the next few days. As I said, as the debate will be ongoing in the upper house, which should be watched very carefully, as if they actually pass the bill, this would be another opportunity for another dip lower in the British pound. At the same time, the key support remains here is basically around the 24.28, which is the 50-day moving average. I guess some buyers will like it to appear here again, but I would stay on the short term, like bearish on the short term more than to be on the upside. But at the same time, we have to watch this triangle very carefully, as I think so that a break or another leg lower is more likely for the time being. Looking at gold, gold price is also developing very nicely. So we broke above, as I said, we broke above the 100-day moving average last week, and then we hit the 37 resistance area, which is a 61.8% Fibonacci from the recent declines. At the same time, we tried to retest the 100-day moving average. It was a very positive move from there. We had a very impulsive move from almost like 121 to almost 37 at the end of the week, which is very important close. I guess this close is also on the weekly chart is still very positive, but at the same time we have the 100 or the 200 week moving average, which should be watched very careful. I guess we might see some sort of another downside retracement just on the short term before the upside continues. I'm still very bullish on gold for this week, but for the time being, for this year at least, but for the time being, we need to see some sort of a retracement to the downside. Finally, the US equities is, I'm going to be very brief on that. Another break above the another break above a historical high again. We're above 20,272. It's just keep on going, and I'm not interested to buy any of these indices, whether the S&P 500 or even the Dow Jones, because I still believe we need to see some sort of a retracement to the downside before the upside continues. Otherwise, the higher it goes, I guess the bigger the retracement, or the bigger the correction to the downside. So these are the technicals for this week that I'll be watching. And as I said again, the major things that I'll be watching is in the British pound and both Kiwi and the Aussie. So this is it for this week, and as always, if you like this video, you can share it on your social media, and follow us on Twitter, Facebook, and also YouTube and all social media sites. If you have also any questions, you can leave it below the video. I'll see you once again next week. Have a good one.